Hi traders, I thought I would do this quick video on the FOMC and the Bank of Japan meeting that's coming up next week. There's still a good 5 trading sessions to go, but I think if the smart money will try to pull some strings, it is quite likely that we would see some strong price action movement this week. So this would be a good opportunity to take a look at some of the currency pairs, and most importantly the euro dollar, dollar yen, and of course gold, because that's where the action is going to be. So the first chart you're looking at is a 20 pip euro USD chart. What you see on the chart is 3 levels, 1.13, 1.12. Let me also add 1.11 and of course 1.10. So I think within the whole week and maybe into the FOMC meeting the week after, we could see Euro USD practically moving between 1.13 and 1.10. Maybe there is a chance that we could see the Euro testing 1.14 as well. We don't know, and let's see what prices are telling us. So what you have here is a median line that I've plotted. You can see that price hit the first outer median line and then reversed and fell back to the lower median line, and then you had a bounce here. Price formed a lower high, price formed a lower high near 1.13, which was last week on the ECB meeting, and you had a dip again to the lower median line. Now you could probably expect the euro to creep up again, and if there is any hope for the euro to make a small retracement, it's quite likely that we would see a move to 1.1258 and maybe to 1.1278. So this is the level to keep an eye on for this week. If the euro does indeed post a reversal right here, then you could expect prices to slide strongly, potentially reaching 1.11 and eventually to 1.10. To the upside, if price manages to break out and for some reason the dollar is bearish this week, then watch for a close above 1.1258 and maybe above 1.13, and then look for a move to the upside. Still, I would expect a drop to happen somewhere back to 1.125 before prices can push any higher. The next chart is the dollar yen. As you can see, prices have been falling steadily. I've applied the median line to the charts as always, and also the stochastics to look for any potential divergence on the charts. And what we have here is a steady decline. I suspect that we could see another small push back to the 100.82 and maybe 99.8 region to establish support before the dollar yen can push higher. As a result, there is a possibility that you could see the stochastics falling back, and this time maybe making a higher low. In such an event, the price levels of interest are the initial target at 105.8, then you've got 111 rounded off, and you've got 118.2, which is a strong support level, which is again pending a retest. So for the dollar yen, the upside is quite strong, and I suspect the Bank of Japan might be coming out with a surprise this time around. If you can recollect, The BoJ has been fairly quiet for the most part of the year. They cut the interest rates earlier in January, and since then it's been purely speculation and the BoJ disappointing. If I'm not mistaken, I think it was in July, I think it was in July that the Bank of Japan did a mini easing. They only expanded the ETF purchases, but again, the action was kind of disappointing for the markets, which saw the yen continue to rise. So hopefully this time the Bank of Japan will come out strongly, maybe cut the interest rates to minus 0.2% and maybe expand the monetary stimulus plan as well. So it's all speculation for now. What we do see is the price, and I would suggest that we simply trade the price rather than try to understand what the central banks may or may not do. So to summarize the dollar yen, you've got the price moving within the falling median line. You've got a low here, and you've got possibly higher low here. But I still think we are due for a test towards the 100.8, 99.8 region. And from here you can expect prices to take off. The GBPUSD is kind of interesting because it's been rising quite strongly over the past couple of weeks. And it was only last week that we saw a bit of declines in the British pound. The week ahead is quite busy. You've got the Bank of England meeting, but it's unlikely that you would see any changes to interest rates or the bank's asset purchase program. You've got the UK's inflation numbers coming out and retail sales, and of course the jobs report. So lots of data to keep the pound busy. And if you recollect, I think it was in July, the numbers were pretty strong for retail sales and for the jobs. So going into this week's release, the expectations are kind of strongish, if not strong. But be prepared for any potential pullback in the jobs as well as retail sales. So the GBPUSD is a 20 pip chart. You've got prices moving in the rising median line. You've got a median line failure here, and then prices fell back to test support. Now we could expect a bit of retracement to occur towards 1.33, 1.3328, which could be a reversal, or you could see prices rally towards 1.3388 as well. As long as the high is not breached, the GBPUSD is poised to fall towards 1.3068. The bearish bias remains invalidated if you've got the GBPUSD bouncing back to find support near 1.3328 and 1.3307. Then finally we've got the USDCAD. Again, prices have been a bit volatile with everything that's going on in the oil markets. So you've got prices initially moving within the falling median line. You had a low and prices quickly bounced up, and you had a bit of a retest and maybe what I would call a stop hunting, with prices making a lower low, but again soon retracing strongly. Anyway, the stochastics shows a hidden bearish divergence. You've got a high and a lower high here, whereas you've got a high and a higher high right here. So the resistance level near 1.3056, 1.3036 is something that could offer prices to retrace back to test the 1.289, 1.2877 region. The setup is invalid if you've got a bounce above the 1.305 level, in which case if this turns to support, then you could expect prices to move to 1.315 and 317 region. So in summary, the USDCAD is expected to dip to 1.289 and then potentially rally back towards 1.315. If you've got a breakdown below 1.287, then you could expect the dollar CAD to fall towards 1.27 region. Now that we've got the majors covered, let's take a look at the dollar index. Okay, so this is the dollar index chart. What we have here is a very interesting inverse head and shoulders pattern. That's your left shoulder, the head, neckline resistance, and the right shoulder. So if somehow the dollar index manages to break out above 96.195, you can expect the rally to rise towards 97.5 region. Prices are currently moving in the rising median line, but it's yet to be validated. There is scope that you could see a bit of consolidation at this level before prices can move higher. Keep a note that you've got the inverse head and shoulders low at 94.2, so if prices fall back to this level, then the inverse head and shoulders pattern would be invalidated. The broader picture for the US dollar is that after a test towards 97.5, we could pretty much expect a bit of a decline in the dollar index. In order to understand this, we need to look at the bigger picture. Okay, so you've got the falling median line and then price dipping back to test the breakout level, and then you had the test of resistance around 97.8 and 97.5. And as you can see, the rising median line has been constructed, and following the breakout you had the inverse head and shoulders pattern, which is kind of a continuation pattern. Further upside can be expected only if you have a breakout above 97.8, 97.5 region, in which case the dollar index is likely to target around 9900 level, which we've seen last year. Now, one of the things about trading, especially surrounding the big ticket items like central bank decisions, is not in trading a select set of currency pairs. It does not mean that you need to focus simply on the Euro USD, Aussie dollar, Kiwi, yen, etc. It's more about finding opportunities. And here are some of the currency pairs that I think have the biggest potential. You're looking at a 5-point Renko bar for gold. And what you have here is a strong bearish divergence that has been formed and building over the past couple of months, years. You can see the trend line that's been plotted. You've got your first support near 1200 region, and you've got your next support near 1246, so let's round it off to 1250. And near the 1360 level, prices have turned flat. Notice the rising wedge pattern that's formed here. You can see a breakout and a retest which we saw last week, and prices are looking to decline. You could expect some kind of a bounce around the 1300 level, which is understandable, being a round number. Maybe you could see a bounce back to the 1335 level before prices can fall towards 1250. So yes, in gold, I'm kind of bearish. I think gold prices could fall towards 1250. If I were to trade gold, I would have a small long position near 1250, and I would have a larger position near 1200, and I would be targeting 1300 and 1400, because within the medium term, gold looks bearish, but over the broader horizon, I think gold is really going to rally. So this is the gold chart. Let's take a look at the Euro Yen. Now, I hope somebody who's watching this video has a long position in the Euro Yen, because this is one really beautiful trade. Let me tell you what's happening here. You know that the Euro Yen has been in a steady decline, just like most of the other yen crosses. But after prices fell towards the 111.065 or around that region and made a low, you had a nice strong bullish divergence. You had a nice long bullish divergence here, which basically points to a strong upside move in Euro Yen. And the reason why I call this a very beautiful trade is because, as you can see, after forming this low, prices rallied, and they fell back right here towards this neat little support at 112. And currently you are seeing the Euro Yen trying to rise above the previous high formed at 116. To the upside, the targets that you have is 122 and 126.5. So if any of you have long positions in Euro Yen, especially from around the 111, 112 region, I would suggest to keep holding on to your longs, set your stop losses correctly, try to minimize the risks, and target 122 and 126, which I expect would happen during the week of the Bank of Japan's meeting. So guys, this basically summarizes what to expect from the FOMC and the Bank of Japan. What you've basically seen is the potential price levels. We are not predicting what the central banks are going to do. All we know is that the yen is gearing up for a rally this time, and it seems to be pretty serious. Gold looks to be dropping. We are looking for 1250 and maybe 1200. The euro is looking to do a small retracement towards 1.28, but eventually the euro is likely to fall towards 1.10. So this basically summarizes everything. Have a good trading week and trade safe. We will revisit the trades towards the end of next week, and let's see how the analysis turns out, and probably give you some final tips and advice before the central bank decisions the week after. So have a good week, and more pips to you guys. Cheers.